Hi, this is Butch Zemar. This is video 7 of my 7-part series, the 7 biggest mistakes that people make when they purchase health insurance. The one I'm going to talk about now is, I title it what most of us in the industry call sucker's bets, meaning that the policyholder is a sucker and they're paying the insurance company additional premiums that they're paying for anyways. Two big examples is maternity and doctor visits. So let's talk about maternity. The big misconception of maternity is, well, what if something major happens to your wife and your child? Well, complications are covered on just about every major medical, at least in the state of Illinois. So check with your state Department of Insurance to make sure that is consistent throughout the entire states that you're in. But complications are covered on your major medical anyways. Only thing you're paying for with maternity is prenatal care, such as doctor visits, ultrasounds, all the way up to the normal delivery. It's not that expensive. Typically, when you get an insurance policy that covers maternity, you're paying anywhere from $200 to $300 or more per month, and usually you have a 12-month waiting period before they pay a dime. Everything's applied to your deductible, in most cases, occasionally a copay, but most of the time a deductible. And then you have to pay all the rate increases, so you have to wait 12 months and then they give you an increase on not only your major medical but the maternity coverage. And if you add up all the premiums from start to finish, it could add up to at least $5,000 or more out of pocket just with premiums by the time you conceive and have the baby. And of course, as more months going forward, even in the first 12 months, if you're paying $200 a month, that's $2,400 worth of premium. The average deductible out there that people take are at least $2,000 or higher. Occasionally it's $1,000, but let's just use $2,000. You're already at almost $4,500 out of pocket, plus you still have co-insurance that you have to pay. And of course, if you got lower deductible, you're going to pay more in premium on top of it all. And of course, by the time it is all said and done, you're paying for it anyways. If you ever call around and ask how much does it cost if we had to self-pay for our maternity benefits, you'd be surprised. I know I personally did it, and it would cost somewhere between $3,000 and $4,000 from start to finish with the doctor, ultrasounds, the whole 9 yards, depending on what your negotiated rate is, plus what they're willing to give you as cash discount. So it actually comes out ahead. And now it's go beyond the first 12 months and you're at 18 months. It's just going to cost you more money. So anyhow, the next thing is doctor visits. In a nutshell, you're paying for it one way or the other. Most of the time, if you saw the additional premium that costs to have doctor visit copays in a plan, you would probably be shocked. You would actually have to go to the doctor at least once a month throughout the year in order just to break even on the additional premiums. It could cost as much as $200 more per month for a family. It's probably more, and depending on how rich your plan is. And so you're paying all these additional premiums, and you're going to pay $2,500 to $3,000 per year just for doctor visit, and you still have to pay for a copay at the time of claim. So this all adds up to an enormous amount of money, and if your family doesn't go and spend at least $3,000 out of pocket with the doctor visits a year, it's not worth having those premiums in there. But you're giving it to the insurance company so they can give it back to you later, like a savings plan, but they're not giving it back to you if you don't use it. So basically, watch out where you're spending your money, and be careful of additional programs built inside the policy, such as doctor visits and maternity, that should be cheaper just to pay out of pocket. And of course, this would lower your entire healthcare costs. It could actually drop your premiums to as much as 40 to 60% less than what you're originally paying, making things a lot more affordable going forward. So be careful of this.